2.9% wage growth. That's a headline. Unemployment in African American community higher than, a bigger move up than you would have expected. Your thoughts, Dagan?
I was just going to say there's new population controls in the household survey, which is used to comprise all these unemployment rates. So the number of employed and unemployed Americans won't be directly comparable between December and January. I just wanted to point that out. We'd have to dig into those numbers more. This is a really solid jobs report. Look at the market reaction, though. The Dow futures were down 200 points going into the jobs report. We see the selling pick up just a little bit. Now, I would suspect it's that 2.9% wage growth that is fast. You start to get into that 3 range, and you have the bond worries worrying even more.
This is where you get the Main Street, Wall Street divide. So Main Street looks at these numbers and says, finally, we're seeing some wage growth again. We're happy about that. Good for the economy. Wall Street looks at this and says, we have inflation coming. We've got interest rates on the rise. This is going to be bad for the stock market. So you have a Main Street, Wall Street divide here. I think the average American should be happy about the wage numbers, but buyers in the stock market are probably not going to be so happy.
Dagan, the 10-year right now at 2.83%. We're seeing an immediate reaction. Rates moving up. This is going to unnerve markets. John Hilsenrath, your thoughts?
There's a lot of numbers flying around. There's 2 numbers that people need to focus on right now. The first one is 200,000. The payroll number was strong, and it supports the idea that we've got good growth in the first quarter, like the Atlanta Fed has been estimating. The other number, which is really important here, is 2.9. You talked about it, the wage growth number. It looks like we're finally starting to see a tight labor market give workers more bargaining power. Bigger wage increases. That's good for workers and bad for the bond market.
Yeah, why are markets complaining about this so much? This is a good story, Charles Payne.
It's a great story, and again, I would caution investors to be cool about reacting to some of this knee-jerk stuff. Listen, they would have been shaken out of the market a long time ago, but this is good stuff, particularly the wages. And again, when the employment cost index came out this week, we saw, some of these jobs like installation jobs, transportation, material, these really jobs like that are paying big-time money. The construction number was a record, right, in December, $1.25 trillion, driven by residential construction. And, of course, we saw 36,000 construction jobs. This is rebuilding the country. This is amazing stuff.
That's going to get better with this infrastructure plan.
It certainly will.
Yeah. Joni Courtney, we're talking about wages up, recording their largest annual gain in 8.5 years. What jobs have the highest wages? Give us your sense of where the jobs are and where the high-paying jobs are.
Well, you know what's interesting, Maria? Of course, the high-paying jobs are definitely in the professional and business service sectors, engineering, finance and accounting, even a lot of the nursing and physician assistants jobs. We've seen a lot of movement in wages in that area. But again, we need to remember this report, of course, is looking at hourly wages. And we're finally seeing those great numbers come through. A lot of those jobs might be on the lower level skilled positions. So you'll see drivers maybe being included in this. Warehouse workers, logistics, manufacturing, construction, and that's where we're seeing some movement here. So I actually feel like this report is one of the best reports that also gives a good reality of what I see happening from employers and candidates in the marketplace. We've been seeing a strong demand, certainly for jobs and skills in all sectors, but we've also been seeing wages move. So I feel good about this report, and I think it's a good, accurate picture of what's really happening on the front lines.
I think it's a good report, too, and I think that 2.9 wage number that we saw, we need to see how that transpires over the next few months, because 18 different companies raised the minimum wage. We need to see wages rising in the middle class, not just at the low end.
That's a good point.
So that's going to be something to watch as we can move forward.
Well, Charles, we do have a market sell-off.
Yeah.
Right? We have higher interest rates, which does unnerve investors, in part because what you get paid to own a 10-year Treasury goes into how you value a company, broadly speaking. But I want to ask you this. If you have rising wages, do you now have to start looking at, because that does hurt the earnings of a company, do you have to start looking at sectors, at individual companies based on what their costs, their labor costs are, and ones that might be able to control it better, companies that might benefit from consumers feeling more flush?
To be honest, we've been in like a 2-decade slide in real wages. I mean, honestly, I think the idea that the Fed or anyone would be spooked by this 2.9% year-over-year increase, it's barely hovering above inflation. And most Americans would tell you that it's not keeping up with inflation. It's not keeping up with the amount of money they have to pay for their kids to college. It's not keeping up with all the things. So I just, I think maybe on the corporate side it could be an issue, but for the economy itself, to snuff out this little bitty, what I would call a green shoot after a decade of sliding wages, it would be nuts in my mind.
So
let the American economy evolve.
But is there anything changing the narrative to buy stocks? This market has worsened. It's down 250 right now.
I just think we're making a big, it's been down 250 a lot. We're at a record. We just, to your point, had $8 trillion added to the market. Let it come down sometime. Well, let there be more sellers and buyers.
Come to me, baby. Come to me. Come to me. I want to buy in.
I think Charles he makes a good point about what's going to happen short term in the market and long term in the market. But we've focused a lot on the stock market this year and last year. What really matters is the real economy. And what's happening in the real economy is wages are going up and you're seeing GDP growth. And I think it's worth celebrating that and saying the market is going to catch up with that and come back to reality when it starts to understand we're not going to be in this low interest rate environment forever.
We like green rather than red, and we've certainly celebrated it, but it's worth pointing out that the president has celebrated this record-breaking run in the market and taken credit for it quite frequently on Twitter. So we're not the only ones who've been...
No, he should continue to because...
Well, he should take credit for the economic growth story, that's for sure.
I mean, he can't say, hey, on down days, I don't like the market.
No.
I mean, it's come up
Dagan has said that throughout.
We're up huge. I mean, it's up huge.
Right.
And the idea that it pulls back a little bit... I really think we're just consolidating these amazing gains.
I'm not suggesting that this is the beginning of something worse to come, but I've said repeatedly, you try to take credit for it on the way up, then you own it on the way down if you're the president of the United States.
Although they have to go down a whole lot for him to not want to take credit for it.
Yeah, about $8 trillion in market value since the election. That's a lot to reverse.
I mean, maybe some mainstream media people will poke fun at him, but the reality is I think people are very happy with their 401ks over the last year. They're happy with their wages increases. This is even before these numbers came out because of the tax plan. So I think they're going to be able to ride this into the midterm elections.